Good morning, everyone. It's Tuesday, the 20th of October, which means we've got some crypto news today. And in news today, we've got Bitcoin uncorrelated and strong. So let's get into it. Raoul Pal, the former Goldman Sachs hedge fund manager who founded Real Vision and personal favorite of ours, believes the price of Bitcoin will hit US 1 million in 5 years. In an interview with Stansberry Research on October 7, he pinned the predicted price increase to a wave of institutional funds pouring an enormous wall of money into the asset. Bitcoin's price has exploded by about 40% year to date. It is also the largest digital currency by market capitalization, with a current value of about US $200 billion. Yeah, I think 1 million is about right, he says. Just from what I know from all of the institutions and all the people I speak to, there is an enormous wall of money coming into this, he told host Daniel Cambone. It's an enormous wall of money. Just the pipes aren't there to allow people to do it yet, and that's coming. But it's on everybody's radar screen, and there's a lot of smart people working on it. Pal, currently the co-founder and CEO of Global Macro Investor, said the global economy is moving from the hope phase to the insolvency phase, as investors realize an economic recovery from COVID-19 pandemic will take much longer than anticipated. The economy is not going to recover for a lot longer than we expect, he said. There's no stimulus around, and we've got more problems to come to Europe, the US, and elsewhere. And businesses don't have enough cash flow. They're closing in droves, and that's what I call the insolvency phase. The only answer is more from the central banks, so that's why I started to buy more and more Bitcoin, he added. Other analysts sing a similar song. CoinShares investment strategist James Butterfield published a new report on August 18 that shows Bitcoin is establishing itself as an investment store in value. The report claims that BTC is less correlated to the economic cycle, and the crypto asset is uncorrelated to other asset classes in the investment world. Now you should be seeing an image on your screen, guys, Bitcoin's current position in the economic cycle. One of the trends Butterfield highlights is how investors holding BTC for 1 year or longer jumped from 30% in 2012 to 60% in 2020. Their researchers believe this trend of investor participation is likely to continue. And here's another chart, guys, from 2012 moving to 2020. Since its creation following the financial crash in 2008, Bitcoin has seen meteoric and volatile growth. A CoinShares report called Bitcoin in a Class of Its Own stated, many attempts have been made at boxing in Bitcoin into the pre-existing frameworks of current asset classes, but due to its unique collection of similar yet often non-overlapping attributes, it never quite fits any established mold. Butterfield's report adds, Bitcoin perception is changing over time. Its image as a money laundering vehicle has subsided, with investors now taking a much keener interest in it. News story counts of potential money laundering were much more prevalent in 2013-14, but have since subsided, while counts of Bitcoin as an investment have become more of a focus. Here you go, guys. The next chart on your screen is comparing Bitcoin investment to Bitcoin laundering. The report also details that during the early days, during the growth phase, BTC behaved much like a tech stock, but going forward, researchers think Bitcoin will act more like a store of value. However, Butterfield's report recognizes that in contrast to SOVs like gold and other precious metals, BTC offers other beneficial functions which will add its growth potential. The strategist pointed to the fact that the crypto asset offers programmable money functionality, the securitization of digital ownership, and traceable record keeping with immutability. Next chart on your screen, guys, compares equity, fixed income, real estate, commodities, cash, and digital assets like Bitcoin. Bitcoin has performed much differently than precious metal markets and traditional equities. The S&P 500 has jumped over 50% since the mid-March market rout, otherwise known as Black Thursday. Recently, the S&P 500 touched its first all-time intraday high in the last 6 months. Despite equities and the S&P 500's recent performance, CoinShares does not believe Bitcoin fits any currently established asset class molds. Because of its characteristics, scarcity, liquidity, high uptime, evidence suggests investors are increasingly using it as a store of value. Butterfield's report concluded, this has started a self-reinforcing process of financialization, which we believe will lead to increasing use as a store of value. Evidence of Bitcoin's evolution to a store of value has been reinforced by data indicating that exchange holdings are decreasing steadily. Cryptocurrency reserves held on digital asset exchanges have been dropping to new lows, as some of the top exchanges have seen significant Bitcoin reserve balance drops. A few months ago, trading platforms had a lot more Bitcoin reserves on hand, and on-chain data shows a few exchanges have seen customers steadily drain 187,000 Bitcoins from exchange-owned cold wallets. In February, Coinbase had 1 million Bitcoins under management, and today reserves are down over 9%. According to the BitUniverse's online exchange balance rank tracker, the San Francisco trading platform has a mere 908,560 BTC under management. Statistics show out of the top 5 crypto trading platforms, over 187,000 Bitcoin has left these exchanges since the June report. Glassnode's exchange balance versus Bitcoin stats show that there's 2.7 million Bitcoin held on exchanges today. Glassnode stats indicate that out of the 21 million Bitcoin cap, exchanges hold 12.85% of all that will exist, and 14.59% of the 18.5 million BTC currently actually in circulation. 1.8 million Bitcoin out of the aggregate 2.7 million Bitcoin held on exchanges sits in the world's top 5 crypto trading platforms. Exchange balances have been riding lower consecutively for the last 15 months, and the last time balances were this low was around May 2019. To many crypto enthusiasts and traders, the low balances on exchanges suggest users are storing assets in a non-custodial fashion as opposed to leaving funds with a third party. The data from BitUniverse and Glassnode also suggests that liquidity and selling pressure may lower, all of which is leading to the current run-up that we are experiencing. When you buy Bitcoin from Ainslie Wealth, you have the choice of receiving it into your own existing non-custodial wallet, one of our cold Ainslie crypto wallets with offline access with zero digital footprint, or in cold storage with one of our storage accounts where we store it for you. So there you go, guys. That's news today. I hope you enjoyed it. For any crypto products, please visit ainsliewealth.com.au. And for any of our hard metals like gold and silver products, please visit ainslieBullion.com.au. Hope you guys have a good day, and we'll catch you tomorrow. Bye.